Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, February the 23rd, the year 2022. Let's talk trading. Price part 3. These videos are for educational purposes only. Your results may differ from mine. Okay, let's just go through the charts real quick, and then we can get on to price. But we'll be talking about price as we look at the charts. So right now we have the pound, 114 pips above the monthly open, 86 off the monthly high, and 123 off the monthly low. All the gaps have filled, but on the week, we are 26 pips below the weekly open. And that weekly open on this particular broker was at 84, and it's been crisscrossing the weekly open the past couple of hours. We're 81 pips off the high and 19 off the low. And you can see here we've been in both the upper and the lower weekly wick zone, and we have bounced out. Interesting trade here. We had the opening range for the week, and we broke out of that low there. I think it's at 35.81, and we're now at 35.57. We are 17 pips below the daily open, 63 off of the high, and 1 off of the low now too. It's oscillating. I thought I had updated these to put in, might have the old version on this machine. Okay, yearly, 30 pips above the yearly open. And let's see, 2 days ago, we had an inside bar. And you can see here, we broke out of that inside bar low. Some good inside bar action here on the week and a few still on the month on the other pairs. But you can see we're now 26 pips below that 81 level. Remember, the weekly open on this particular broker was right around 84. So you can see here we broke that. And we also broke it yesterday. 65 pip range on the day. It was funny, Walmart and I were trading though for the past couple of hours, and range was at 40. And I said, something's got to happen. It's got to break out. You can see here we broke out at a previous day's high, but we didn't go up far enough. And then you can see here price dropped out of these wick zones, this wick zone, this wick zone, this wick zone, this wick zone, and you can see the rest is kind of history. We do have one pair over 200 pips with a total of 7 pairs over 100 pips for the day. Just exited that short zone here. This big candle here came in. And remember, yesterday I talked about covering. So you can see here, this candle didn't get covered. This candle got covered. This candle got covered. This one didn't get covered. And I was talking about it covering, and so you can see here there was a huge move to the downside. And what we saw from yesterday was we had this big return bar, but you see this level right here, from here to here, that's all an imbalance zone. So I was waiting to see, and it did get cleared out. Remember, I think I told you guys I was caught short yesterday, and I just wrote it out. Well, guess what? It paid off. The one thing, though, I should have just sat on my hands all day and just waited, because I left some pips on the table by not staying in that short trade. But that happens. And one of the things Walmart and I have been talking about is managing emotions versus managing the trade, trading the price, what you see. It can be difficult at times because I was in a trade, it went against me a few pips, not bad, just 4 or 5, But then as soon as I could get out, I got out, and then this happened. Literally, this happened. So if I would have held my shorts back here, I had one, I think, about 2.7 and one at 5.3605. Would have been a nice trade. But I had jumped in early. So I was experiencing the pain, my reaction to the market, things I tell you not to do. So I like to fully disclose when I mess up. So I don't want you guys thinking I'm some guy that never makes mistakes or won't admit when I make them. One thing I just noticed here, the pound New Zealand, the new beast, is over 2. So I'm not sure how significant that level is, but let's take a quick look here. Okay, it looks like it's been over 2 for a while, but it's not something that I trade often. So that 2.0, it seems it's already dipped below it once and then pulled back up. So might be interesting to see what happens with that pair. Rats, green rats, get ready to feast. On the pivot, near the pivot, bias is long. Well, that didn't quite pan out the second time. Near S1, bias is long. We're 16 pips away from S1 at the time. So we'll see what happens. Pivot, we took out the pivot. When we were trading earlier, we hadn't quite taken out the pivot. And I kept saying, it's got to take out that pivot. It just has to take out that pivot. And it did. So that's one of the things. If you're a statistical trader and those statistics are in your favor and you take that trade, then sit on your hands and see if it plays out. Put your stop loss in place. That way, if it doesn't play out and it goes too far against you, you're out of the trade. But if it does hit your target, then at least you've taken the pips off the table, or you were given the opportunity to. Okay, we're looking at the daily. Once again, outside the wick zone. Just keep trading those wick zones, the price moving out of them. Once again, these videos for educational purposes only, but it just seems to work. You can see here, out for a little bit, out for a big bit, back in, barely out. But I wouldn't have taken this long. Real simple reason why. This candle covered this candle. Big candle, momentum, return bar. We talk about return bars a lot, at least I do. But this is also a momentum candle, meaning there's a lot of action, and usually a big candle is followed by a big candle. In this particular case, it wasn't, because it was hitting all these wick zones here on the 1 hour. You can see it. Lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. So if anything, this was just a pullback, and then you can see things continue. So there's always exceptions to the rules, and then exceptions to the exceptions to the rules. So you just have to trade what you see and put your stop loss in place. That way, if you're not profitable, you don't lose too much. Very interesting trading here. You can see off of the lower high, a move, lower high move. In fact, I think I caught that move right before I made the video. But you can see here, it put in a 1 ball and it's coming back down. This is on the 1 minute time frame. Wall lines, this was it was almost too simple. The 36 here and the 35.70 here. There's some people out there still saying they're having difficulty. I'm not sure what you're having difficulty with. If you trade during the times of day that you're supposed to trade the wall method, it usually pays off because these candle ranges are usually, above 13. And here you see you've got some all above 20 and one even above 30. So there's no reason to not be able to take some money off the table with the wall mall method. A lot of people say, "Well, I enter, it goes against me," and you guys then say, "Well, you don't take the first entry and blah blah blah. Can't you just give me a straight method?" It's just like, well, yeah, this is a straight method. H1 candle color at the line, or actually, um, you can even you can switch over to M30 and do M30 at the line. Um, And finally, you can see here, we dipped into the ATR zone. Here, we dipped into the ATR zone or touched the ATR zone up here. And you see here, I told you yesterday about kinks. We had a kink right there. This was a price turn. Right here was a price turn. You see it pulled up and then went down. And this is just continuation. This was a cover here. See, it covered that. Then it actually covered that one. And this candle went and covered that one. But usually on the covers, I usually look at the M30s, not so much the H1s to cover. So there you go. Should probably put that back to the H1. Now on for today, I've only got a few minutes. I guess I rambled on going through those charts. I was telling you traders about I've been trading with the indicator too, and I learned something here. I was running the stats, and I'll just show you what I'm looking at. So I'm looking, say I want to make trades, I want an 80% historical chance of winning over the last 1,000 bars. So you see if the difference is greater than 3, that only happens about 21% of the time. So 80% of the time, that doesn't happen, okay? You move up to 15, you see greater than 5, that only happens about 21% of the time. So that's still close enough to 80% of the time, this doesn't happen. And then if you move up to M30 at 7, you can see that 21.8 number again, which is, once again, almost 80. So 4 out of 5 times you should win. So what I'm looking for is this to be a 3 or higher, this to be a 5 or higher, this to be 7 or higher, and then I look for the reversal. So right now, we had some red numbers, and down here, these were all indicating reversal. And so price hit that low, ran up to the high and came back. And I took one of those trades just based on pure statistics like that. And then the other thing I did was I updated the 2018 trade reminder, and I put a couple things in there, distance to the moving average. And the other thing I put in there, but I guess I don't have any of those indicators on here. The ATR, I mentioned Momo bars or momentum bars. If we have a bar that is, say, 1.5, it's ATR, that's a momentum bar. Be real careful reversing on the next bar because that momentum could continue. So for example, here, here, and here, or if you move up to H1, that's when you can really see it happening. So here you had a big bar, there you had a little continuation. Okay, so this is where I get caught a lot of times, or did get caught, but now I've got my trade reminder, but I don't see any of those ATRs messages popping up. So I might just turn this into a 2022 indicator since I updated it and since I'm talking about it, so traders can get it. So fellow traders, once again, we've just been talking about price and just looking at price and just simple things like trading with the H1 candle color or M30 candle color, trading out of the wick zones. Simple. Just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.